G'day and welcome to the latest episode of Vantage Point, where today we're joined by Russell Baskerville, the chairman of Monvia, which lists today on the ASX, as well as the CEO, Simon Bright. Guys, thanks very much for joining us. And
it's good to be here.
And well done today.
Thank you, Simon. Super pumped.
We're still a little bit ahead of the listing, so fingers crossed, and we hope for a good start, but it's day one. But maybe before we sort of get into the detail of Monvia, maybe just take us back, how you guys know each other. You've obviously had empire success before. Why come back for more medicine on the ASX?
It's been a long time, right, Simon?
It has.
I'm trying to cast my mind back now, but I think Simon was the CEO of Indigent, which was a business that we bought when we were running Empire. And Simon very quickly became our Chief Operating Officer following that acquisition. Mm-hmm. But that would have occurred maybe 13 years ago, Simon?
Yeah, it was 13. Yeah.
Oh, look at that. Nailed it. There you go. So that's how we got together.
Lucky 13.
Yeah.
Yeah.
And so just maybe in terms of Monvia, so obviously listing under the ticker MNV today, but it's a long history, not necessarily with the name Monvia, but maybe you just sort of give us a bit of background. It's been around 30 odd years. Life insurance software. Just run us through the story in a bit of a nutshell.
Yeah, well, maybe I'll kick off and Russ can kick in. But look, been around for close to 30 years. Started by a husband and wife, Martin and Kimberly. They did an amazing job to grow the business over that time. I think it'd be fair to say that what they'd really been focused on is being experts in the insurance sector, and that business evolved over many years, but they had a change of strategy and decided back some 5.5-6 years ago really to focus on building a SaaS platform for life insurance companies.
And so where do you guys come in? I'm assuming sort of 2025. How did that sort of develop, the discussions? You actually invested your own money. Maybe just give us a bit of background or breakdown in terms of board and management now own quite a significant chunk of the listed company. Just give us the sort of breakdown there.
Yeah, so board and management currently would own post-IPO about 40% of the stock. So, really significant investment by all of the board and management. Yep. And I think, key here is bringing together a board that's got significant experience, not only in ASX listed companies, and all of our directors do, but also in the life insurance superannuation industries. And I think, a board that can genuinely open doors and add value. So I think, highly invested, highly motivated board. But just going back to the question around the business itself, what does Monvia do? I mean, Monvia provides software to large life insurers to modernise their clients' experience and make large life insurers more efficient, right? And we just saw an enormous opportunity. We've got these really large and often very, very old organisations that are struggling to provide relevant sort of modern services to young people, but such important services around, life insurance. So we think it's an enormous opportunity to modernise that sector.
And in a market where the majority of our competitors are going to be the internal IT teams of those organisations. So, we've seen the digital transformation in banking. We've seen it in other sectors before that. But really it's starting just to come into the insurance sector. So it feels like the right time to be involved.
And in terms of what you talk about the software for life insurers, what does it actually do? Does it help sign?
Our software supports an insurer basically across the entire life cycle of an insured individual, right? So if you think about it, there are multiple channels that insurance is distributed. Those channels are direct, retail, group and corporate, and we cover all four of those channels in terms of our application. But what does that actually mean? It means that we're providing the software that creates the first experience that those people have when they want to actually acquire a life insurance product. And that might be the individual themselves if it's through direct, or it might be a broker if it's through retail.
Yeah. And in terms of the investment that's gone into the business, they've had they've got one customer that's rather significant. I think it's sort of 70% of the revenue. which has helped fund a lot of the development in terms of technology. I'm assuming, maybe just give us a bit of an understanding around the tech stack. Is it sort of old and you're trying to transition that through now, or has that already been modernised?
To be honest, we can't take the credit for that. You know, that was done in Martin and Kimberley's time, 5-6 years ago. But
so they were still sort of forward enough in terms of...
Very much so. And, Martin is an engineer at heart, and basically what he created was a cloud-first, cloud-native application. It uses modern tech. People in our organisation and people outside of our organisation want to be working on that tech. So it's ready to go for today, right?
And in terms of the sort of revenue profile, how has that sort of looked over the last... So you guys acquired it, or new management when?
So we acquired it 12 months ago, almost to the day, not quite. So we settled on the acquisition. That's it, 1st of July last year.
Yeah, and so how has it sort of changed internally in terms of running the business? Obviously, you coming in. Have you sort of seen it change, and has there been sort of significant turnover or team going through coming in, coming out?
Look, I think it's fair to say that we've had a reasonably major refocus. But that refocus, I think, has been seen by the business and particularly by our employers as being very positive. Our refocus was really about taking the amazing work that's been done in the last 5 years and actually taking that to market, because I think where the business was historically is really just working against their current client set. Whereas we come in from a very different background where we're used to running, multiple... $100 million programs of work, and we basically are in that mode of just really wanting to look at growth opportunities in this market in Australia and New Zealand, but also growth opportunities into Southeast Asia. But I will say that change and that refocus has been really well received by our people, and we're not a massive business today.
How many people?
We employ just over 100 people. We have a retention rate of 98%, so that's unrecognised in the market. And I think the other thing that I always like to call out is that we also have 44% of our workforce are female, and that is unique in the IT sector, right? And if you go back, I think what we've been able to do is to bring intellectual property, but more importantly, intellectual knowledge across that journey, right? So we've got people who've been in the business for almost 20 years. And in fact, the stats are today, we have 10 people that are over 15 years of service, and 5 of those are female and 5 of them are male. Right? And we've been able to bring those people, but just grow them into new roles and make them, responsible for helping us bring that knowledge through.
And maybe just in terms of the structure of the deal, of the IPO and just the numbers around it. We've come out today with the day one announcement, prospectus numbers and whatnot. But maybe just sort of give a bit of a rehash around those, money raised, what's the market cap, the listing price.
So raised $17.5 million. Pleasingly, strongly institutionally supported as well. So we were wrapped with that. Market cap's about $100 million. Pro forma forecasts in the prospectus revenue of 27.4 million, and underlying pro forma EBITDA of 6.6 million for FY26.
And in terms of how we sort of scale, we're not going to provide much more forecast than that. But how do you sort of see? Is it building out the team? Is it going through partnerships? How should we sort of look at that?
Yes, it's a good question, right? I mean, our thinking is that one of the pivots that we've really tried to focus on is that we want to be a product business, a software solution provider. We don't necessarily want to be a services business. So we don't see our services arm growing over the next 5 years, maybe incrementally, but certainly not any form of scale. So if we want to grow, we're going to need to leverage partners to do that, and that's absolutely within the bounds of our strategy. And that becomes really important as we think about stepping into offshore markets.
Now, in terms of case studies or sort of practical examples, maybe we can sort of talk to your biggest customer. How has that sort of evolved and seen success since they've adopted and grown with it?
No, really interesting to look back. If you look, I keep referring to 5 to 6 years in terms of the life of the platform that we have today. and really our largest client has been on the platform for that entire time. They came to the business at a time when they had behind them, they had a failed implementation, and they really needed to solve a problem. They're sitting in a declining retail insurance market, and it wasn't a pretty situation. So what we've been able to do with them, alongside them, is basically turn that retail business around for them. They've had growth across the last 5 years at circa 66% CAGR in that retail sector of their business. And that's really about transforming the experience that brokers, advisors have when they come to that particular client, right? At the end of the day, we all want our lives to be easy. So if we can make it easy for the brokers to do business with our clients, they're going to win business and grow faster.
So how do you sort of, I mean, it's reasonably tangible in terms of 66% growth, but how do you sort of sell in the software? Is it sort of customer experience, which we then trust will equal ROI and more revenue, or is it a reduction in sort of costs? How do you sort of look at that?
Yeah, look, again, if you think about winning in the market in that space today, which is, still a traditional market, right? Certainly in this region, we're not seeing some of the trends in Australia and New Zealand that we're seeing in Southeast Asia at the moment in terms of how life insurance is acquired. But if you take what that really means today, it is about improving that customer experience and using that to win more business. And in fact, that's evidenced by the fact that the case study that we're referring to, the client that we're referring to, has been hugely successful in winning the business of a number of large super funds in the market. And they've done that by allowing the super fund to see the experience that their members are going to receive when they're coming into their platform. And, that sometimes is worth loyalty. It's actually about, I'll give you a practical example. If a member can enter the portal and very easily uplift their life insurance through a click of a button, and that everything gets done in the background for them, rather than be in a situation where they go to a website, download a form, fill it out, scan it, send it back. It might sound like a small thing, but it's massive in terms of the experience.
I suppose you're thinking of it as a consumer, when you've got a captive audience and you can click then and there. If someone says to me, I'll send you something afterwards, and if you can complete it and send it back, there is zero chance I'm actually going to complete that task. Just with like today's distractions and everything else, absolutely. You probably just don't end up getting life insurance.
Yeah, and look, if we look to overseas markets at the moment, we're absolutely seeing that at another level, right? Where you take the Southeast Asian market, Singapore in particular, life insurance gets bought by people standing at a bus station using their phone. Yeah. Right, and that's what we've just got to be really myopically focused on.
And so the world is obviously moving fast. As SaaScopolis, I can never say the term, but it's been used a lot this year in terms of the AI boom. Business is going to get replaced overnight. Particularly in software, SaaS, seats, been criticised and whatnot. How do you sort of look at that as a risk on the business that something like that comes in and starts to take over life insurance software?
Yeah, look, I mean, I guess you're never in a situation where there's no risk, but let's sort of take a step back and look at the environment that we're in. Firstly, we're in a highly regulated environment. And, I don't say that in any negative way, because actually, I think what we understand from the work that APRA do, is world leading, right, in terms of setting standards for the way that we operate within Australia. But what it does do is it presents a whole bunch of obligations to the insurers and to us as their providers, right? So it's really important that we've got full traceability, full auditability through the entire transaction life cycles. And, the classic is, if a claim is being paid, why is it being paid? If a claim is not being paid, tell me the 10 reasons why it's not being paid. So to do that, you've got to have software that is fully auditable and fully compliant to those regulations. So, being compliant to CPS 234 takes a lot of work. Okay, it's not something you necessarily are going to replicate overnight. And I think the way the business has been set up in terms of our licensing model is critical too. We don't license on a seat basis, and we're typically licensing on an enterprise license plus I guess the variability in volumes that go through from a life insurer. And what that means is that we're securing ourselves as a base, but we're growing with the client. So if the client is growing, we're both benefiting from the value that our software is creating.
And in terms of from an opportunity standpoint, with regards to further R&D development and sort of efficiencies within the business, how are you sort of adopting to that?
Yeah, look, I think that's where it gets exciting, right? So, and again, you asked me before about what's changed in the business. So pretty much on week one, we were talking about AI and how we start to tool up our people to be much more efficient and effective. We've done that. We've got our developers enabled. We're starting to work through the business analysis functions, the design functions, making sure that we've got those efficiencies starting to be delivered, which is interesting and exciting for us, but the value really comes in delivering software faster, right? But the second part of it really is about what can we build into our platform that enables an insurer to leverage AI to be more effective in the business that they're providing. Easy example, right? Claim summarization. So we take screeds and screeds of information from doctors. We summarize that information to really enable and assist the claims process, right? So you're not decisioning, but you're actually providing better quality information to a claims assessor.
Yeah. So we've spoken on the risk or not so risk around AI. Risks around sort of customer concentration, sort of 70% of revenue stands at one customer. It's just extended. What was that, 5 years?
Yeah, five-year term as of April of this year. So.
Which is helpful, obviously. But in terms of how the pipeline and the sort of sales processes evolved since you guys have taken over it, maybe just sort of step back and how you look at the market now, what it was like when you first came in.
Yeah.
Was there a significant pipeline? Was it not going to take on too big jobs because it's a sort of smaller team and not wanting to hunt elephants? How's that sort of look?
You want me to keep going?
You keep going. You're doing a great job.
Rolling.
Yeah. So I guess to answer the question again, it's a little bit of a look back in time, right? Where was the business? It was owned by the husband and wife team. They were doing really well. The business has grown during that time, but their sole focus was to make sure the current clients were happy, and in particular the single largest client, right? Really, we come in with a different mindset, which is how do we take all of that and bring that sort of growth mindset to the business. Probably spent the first 9 months really focused on the Australian New Zealand market and starting to build pipeline. And don't get me wrong, there were deals in our CRM system, but they probably weren't well qualified. They probably weren't well structured, right? So we've really almost had to rebuild that from scratch. I think we're in a really strong position in terms of pipe within that market today. We've got active deals where, we're in demo stage, we're in presentation phase. They take time, right? And they've probably taken us 9 months, 10 months, 11 months to get them to that point. But what it's starting to do now is give us the confidence to go, so what's next? And both myself and Stuart, our head of clients, we spent a bit of time up in Southeast Asia over the last couple of months. I was up in Singapore with Stu just 3 weeks ago, really starting to get a handle on what does the market look like, what's the opportunity for us. Actually, it was a great trip we did. It was with InsurTech and Austrade. And really great to have those supporting us to give us the insight to the market. But look, we're just seeing that as a really great next stepping stone for us, not only in terms of the opportunities that exist in the market, but the relevance in terms of regulation and legislation.
And in terms of the money raised, obviously, part of it sort of to satisfy the pre-IPO sort of convertible note investors, as well as sort of growth capital or further development. What's on the roadmap in terms of new technology, new software, new products?
Yeah, so I think if you look at our roadmap that we have in place at the moment, what sits at line number one is what we're doing around AI and enablement of our clients. And there's probably two critical parts of that. One is enablement in terms of I sort of being a non-technical person, I think about it as building APIs. Apparently they're called MCP servers, but it's about...
I'd wondered where they'd gone.
Yeah. So it's about building the connectivity that allows our clients to access the system and advance workflows without it being a human, right? And again, if you go back to our licensing model, we don't care if that happens, right? Because we're not a per seat based license model. So it's enabling that, but it's also bringing that kind of functionality that I talked about in terms of the likes of claim summarization. But beyond that, it's about building out the capabilities of our core areas. So, you know, we're privileged in the fact that we have a platform today that is pretty much end-to-end for an insurer, but not only is it end-to-end in terms of dealing with new business, policy administration, claims, and everything that's associated with that, whether it's commissions, whether it's data insights, whether it's reinsurance, but also we cover those major channels. But you know, you're always going to want to build on that in terms of, you know, what's the capabilities in each of the channel versus capability.
Jumping around a little bit, but in terms of how you sort of, you know, go to market, is it tenders, and how do you sort of win versus a competitor? How does that sort of look?
Yeah, very much tenders is part of that. But probably where we started is you just got to go start talking to people, right? I mean, you know, our brand wasn't necessarily in the market. You know, I think what we have absolutely achieved in the last 9 months is to get a much greater profile in all of the large insurers in Australia and some into New Zealand as well. And that in itself gets you a conversation. If a potential prospect is going to go to tender, they're going to go to tender. But having the conversations early is really, really important.
You talked about brand. Why Monvia? I haven't actually asked that question.
Simon's favourite question.
Yeah. I'll try and make this very long story a very short story. So spent, I think, 2-3 hours one Friday afternoon walking the Coogee to Bondi Walk, listening to one of our guys present the solution. So I wasn't watching it, I was just listening. And the words I kept hearing is that we have a single core. So we have something that is maintainable going forward, but we provide users or organisations different journeys in terms of how they access the system. So the words that started to form around that were single core or mono, and pathways being via. So it's actually mono via, which we shortened to Monvia.
That makes a lot more sense than what I thought it was going to be. I think I was going to say that you were one Friday afternoon, you were having a bottle of red and you're sort of slurring words a little bit.
Some of that might have happened, and if I take it one step further, while all of the observations were made in that 2 to 3 hour listening situation, the information that I gleaned, I actually put into AI that helped me define what that name might become. Utilising
AI at its best. In terms of sort of comps, with regards to ASX peers, is there anyone sort of out there that sort of compares in the slightest? Do I look at a Fineos? How does that?
Look, I think the obvious one is a Fineos, right? Yeah. At the end of the day, I think in terms of comps, and the ASX is a pretty small sort of SaaS listed market. So really, comps are enterprise SaaS businesses in Australia. That'd all really be comps. But similar services, similar business, probably Fineos.
Yep.
Yeah.
And maybe if we just sort of look at the history of Empire and sort of what you learnt there and sort of what you want to instill in Monvia today, day one, what have you sort of learnt over that journey that, A, don't do again, and B, do more of?
If I look back, and Empire was quite a long journey, and there were a lot of learnings, and we did a lot of things poorly, and obviously a few things right along the way to achieve the success we did. But I think looking at Monvia and what it needs to be doing going forward as it scales, something that was a real lesson for us at Empire was ensuring we had like the platform for success early. So, good visibility on our business, good discipline around management, focused on kind of a small number of really important metrics and really driving hard towards those. It took us a while to get there at Empire, but they were things I think ultimately that made us a really successful business. So that was important. And then in going to market, a little bit different in this business because by the nature of the business, we're pretty well defined in terms of market, but being really clear on who our customer is, right? What do they look like? How do we target them? How do we not get distracted, right? Not go and do a deal for deal's sake, but do deals that make good sense, that are commercial, that economically make sense over the long term, and be really focused on that. And that's, they're disciplines that I think we'll bring to this business that we certainly learnt at Empire.
And in terms of the team, so how many are joining from Empire, or have been on the Empire journey within Monvia? If I look at the board, it feels like a lot of them.
Yeah. So look, the board, has obviously got strong connection back into Empire, but also, there are individuals outside of Empire. We've got the likes of Steve Tucker on our board, ex-CEO of the MLC, Sean Kanji, very successful entrepreneur in his own right. So there are some really high quality directors that we've been able to attract. In the leadership team, really we've taken, the core of the Empire leadership team that were there for a long time and worked for a long time together. So CFO comes out of Empire, Stuart, who's our head of clients, comes out of Empire. And I think the importance there is not only the proven capability of them as individuals, but the proven capability of them to work as a team, right? There's a lot to be said for understanding each other's, strengths and weaknesses, and when you need to step in, when you need to pull back, how you pull together to win a deal. Those are really, really key as team-based success as opposed to individual. So for me, I'm really excited not only about the fact that, hey, Simon's really capable and we've got Simon to come and lead the show, or Stuart's a great salesperson. It's that I've got the whole team together, and that team knows how to perform and win together, and that's exciting.
And in terms of someone looking at the company who's not a shareholder, who hasn't met you, and obviously hopefully they've listened to the whole thing up until now, what are the sort of, it's going to take, we're not going to have,
I reckon if they're still listening, they're buyers.
Let's hope so. But you got to build a pipeline, right, and let it mature. So we talked about, when you took over the business, we're not expecting a win tomorrow. Tomorrow's Saturday, so we're definitely not expecting it. But in terms of, sort of key leading indicators, how should we look at that outside of, big contracts and new announcements? What should we look at there?
Yeah, well, look, I mean, we would start with pipeline, right? But, at the heart of the business, and to Russ's point around key metrics before, to be myopically focused on annual recurring revenue is where we're at, right? Yep. It is about how do we bring greater value from the clients that we have today, or deliver greater value to them, and, how do we grow that into the market? So ARR will be a key metric for us all to be focused on. I think the growth in the pipeline over the next 6, 12, 18 months is critical. But we're a enterprise scale provider, right? So we won't be expecting to announce a win every month, but when we announce a win, it will be significant to the business.
Yeah, and I think more so, I mean, clearly the business needs to grow its scale in terms of revenue and profit and ARR and all of those things. But right now, in the early stage development of the business, I think quality of logos, like quality of new clients, is critical, because not only does that demonstrate the kind of the success that the software can have in these large organisations, but it builds a platform for growth, right? We might win a small deal with an amazing client. That client's going to hopefully be a reference client and a client for life that can just grow and grow and grow, as opposed to, if you might win something really small and say, oh, it's a bigger deal, but actually strategically it's less important. So for us, it's about high quality logos and brands and real long-term tenure contracts that are a base to grow.
Yeah, maybe just adding to that. I mean, Russ is spot on, and I think what you see in the Australian market at the moment is a lot of the insurers being highly focused around claims and claims processing. And that, while I like to talk and think about ourselves as being an end-to-end enterprise scale platform, we can also take components of our application and solve point problems for our clients today. And I think that whole area around claims, but also claims ingestion, in the sense that, what's the inputs that you're getting to claims, that's where our product stands out.
I hate asking this question, but I'll ask anyway. In terms of, you've had Capgemini acquire Empire. Is this a business that you want to build up to own for a long time? Or is it a business that makes more strategic sense in the hands of someone else?
Simon, like my response to that at Empire and any other business that I'm involved in is we're building a business for the long term, right? Yeah. We want to build a high quality, sustainable business that's successful in its own right. Yep. And building a business that looks like that attracts buyers. Yeah.
As a relieving answer, because it's never a good sign when you're building it to be acquired. It very rarely happens.
No.
Yeah, and Empire, it was always a focus on how do we just continue to improve the business we own and run for the shareholders that are shareholders of the business today, right? And that made it more and more attractive by doing that.
And the people that work in the business too.
Of course.
All you want is them focused on being part of something that's great and growing on a regular basis, and that's what we want them to be motivated around.
We're going to have to head off soon to the listing ceremony. But in terms of, we sit down here 2 to 3 years' time, no sort of financial sort of linkage in terms of forecast, but what does success look like?
Look, I think success looks like Monvia being a common name amongst the major life insurers, not only in Australia, but Australia and Southeast Asia. Right, ANZ, Southeast Asia, our key focus. We've got a handful of great clients today. If we had 3 or 4 times that in 3 years' time, and we were a household brand amongst those large enterprise clients, that'd be a great success.
Agree with that, Simon?
Yeah, 100%. As Russ mentioned before, logos are critical to us, and we want to be seen for the value that we create in those organisations.
Guys, good luck for day 1. Just the start again, Mark 2, but
it's exciting.
Super pumped. Thanks for having us, Simon.
Congratulations.
No, thank you.
Cheers. Thank you, everyone, for listening.